as well as creating a support network with this network, helping each other to solve specifically any problems that they encounter. It could be tax, it could be accounting, and it could be many other problems that is existing in the business space. So we have today with us Joseph, and he's from Isla. Could you please provide a brief overview of your business and share what inspired you to enter in this field?
Tax preparation became a big industry, so Isla came onto the scene generations ago. And what we were finding is that people wanted more than just tax compliance, they wanted tax planning. And as we worked with clients with their financial picture, their financial advisors were more focused often on stock picking. Say, if we can grab the right stocks, that's how you make money. People are finding you really do better in your finances if you find stable companies and let them grow. The problem that people are having, though, is the tax is killing them. And so really, to be able to merge your financial planning with your tax picture, that's the next level.
When you have parents and you think about all sorts of tax things, in the UK is different, in the USA as well as it's different. But if you do not understand what type of taxation you would cater for, it would be difficult. You will lose a lot of money if you do not tailor that to the next levels.
Don't get confused by the word separately managed account, or SMA. An SMA is just an account that doesn't hold mutual funds, that holds individual stocks, that you can sell those stocks strategically to harvest losses or time the gains as you want to. So the pros of the Flex SMA is you're going to get a tax deferral on the capital gains on your terms. The trend is not favorable to the next generation. So people that are willing to invest in relationships with their tax strategists are going to minimize the pain. We know any of us can grab a mutual fund or an index fund and watch it ride and ebb and flow with the market. That's not the challenge with financial planning anymore. The financial planning are watching your fees, watching your taxes, and implementing your risk tolerance in a way that's tailored to your individual interests and needs.
If someone knew they wanted to master in your field, how would you support them, and what advice do you give it to them?
I would say if you are willing to get out there and listen and do self-education, you're going to get ahead. And when I say self-education, I'm not talking about the CE classes or CPE classes that are required, the 20 minimum per year, 60 every 2 years we have here in Oregon. Those classes, they're basically teaching you the new laws and how the laws are changing and things like that. I'm talking about people who are strategic and innovative. You're going to want to make sure you are just a constant learner, and that would be my best advice.
Artificial intelligence will not solve your taxation problem because it's beyond that limit. Maybe it will take another few years or several years or maybe 10 years for artificial intelligence to talk about the work you do.
We created a platform which takes and trains the models on the different market conditions, which can analyze existing algorithms and train them on the different market conditions.
The market is very imbalanced, and when Sunday President Trump announced the global tariff, the market became very shaky. Could you discuss the key issues in your industry?
Absence of a calculational power which hedge funds have. That's the main problem, is the absence of these abilities to compete.
Someone can provide to safeguard their money. They're going to lose money, isn't it? In these ups and downs after the change of US government. How do you produce, or how do you safeguard, or how do you train your model?
You have to look at some parameters which are somewhat extraordinary, and they're describing some specifics, maybe in advance, so-called like leading indicators.
That's a great explanation. Who are the clients you aim to help?
So we actually created these copy trading capabilities just for exact purpose of people who don't want to get engaged with tools. They just want to do the copy trade.
It will be very helpful for the people they wanted to invest in the future. Hello, everyone. Thank you for joining today's Innovator Circle podcast. I'm your host, Dr. Shah Siddiqui, CEO of Time Research and Innovations, NC Marketing Agency, and Tadbot AI. ICPcast is an initiative to bring innovative ideas, transformative strategies, and forward-thinking insight from various industries, where it is in technology, artificial intelligence, marketing, finance, lead generation, sales, business advisory and development, tax and accounting, or sustainability. We bring you specifically very brightest mind, C-levels executive, and industry leaders who are shaping the future. In today's episode, we will thrill to welcome Dr. Sergey Sevastov, founder and CEO of Tickron. Tickron is an AI-powered investment platform helping traders and investors make a smarter, data-driven decision. And with a PhD in applied mathematics and a background in semiconductor innovation, Sergey has built multiple successful tech companies and holds several patent in high-tech system. He launched Tickron to bring advanced AI and pattern recognition tools to retail and professional investor alike. From machine learning to market fostering, Sergey is leading the charge in making financial intelligence faster, smarter, and more accessible for everyone. So today, we will discuss how AI is changing the game for investor, Dr. Sergey Sevastov on AI finance and the future of trading. So to all our viewers, get ready for practical strategies, insightful discussion, and fresh ideas to help you grow, succeed. Hello, Dr. Sergey. Thank you very much for joining today's Innovator Circle podcast. How are you?
Fine. How are you, Dr. Shah? Thank you for bringing me in.
I'm very good. Thank you. Thank you for your contribution. And to all the viewers, today we're going to be having a detailed discussion about how he has reinvented the trading industry to smartly thinking, and you can smartly benefit from his system. So to all the viewers, normally we have a set of questions and we ask these questions to get to the different insight that the future innovators or business people, they can train themselves or they can get some directions. So first questions I wanted to ask, could you provide a brief overview of your business and share what inspired you to enter to this field?
Okay, thank you. So what inspired is the fact that I was been trading myself on the stock market quite a lot, and I realized that there is a lot of underground currents taking place, and without proper mathematical background, it's very difficult to figure out the market. So that's what inspired. And if I'm going to go talk briefly about our company, then the difference between us and others is in the fact that we are analyzing different market conditions and creating different mathematical models for different conditions. So for instance, like today's market, if we can talk in details about today's market, even like today, particularly April 7th, then there's a really huge volatility. Mm-hmm. So it turns out that some of the algorithms simply do not work on this level of volatility. And if you take the wrong ones, you're going to lose money. Mm-hmm. At the same time, when the market volatility goes down, then you have to take a different set of algorithms. So the question is, what kind of algorithms work properly on different market conditions? And mm-hmm. that's what we've done. We created a platform which takes and trains the models on the different market conditions. Like, for instance, volatility today, interest rate goes up, interest rate goes down, somebody said something, and then we see that our models are kind of adjusting to the market conditions and then giving a proper trade signals on a buy and sell. That's the basic. It's a platform which can analyze existing algorithms and train them on the different market conditions.
That's a great explanation, Dr. Sergey. And you know that nowadays the market is very imbalanced. And this week, when Sunday, President Trump announced the global tariff, the market became very shaky. And still, they are talking about it, and I don't know where it will go. So we're going to talk and touch some of that later on our discussion today as well. Before I jumped to those discussion, I just wanted to ask you, could you discuss the key issues in your industry and explain how your efforts are making a difference for your clients and your collaborators?
Yeah, I think the key problem for retail investors is the absence of a calculational power which hedge funds have. They have tons of computers, they have tons of algorithms. And my analogy is like you could be in a high school basketball league and you can play well. But in the markets, in the stock markets, you do not have a college league and a national league. You immediately get to the national league. And if you don't really have everything which is required to play in the national league, you're going to lose. And that's what happens with the retail investors across the board, across the countries. And what we do is we provide this calculational power. We provide quick access to the market conditions, and then we adjust the models and then give ideas to the retail investors specifically. That's the main problem, is the absence of this abilities to compete.
There's a great example and explanation, Dr. Sergey, because when people think about investing in market, and then if they do not get a prioritized services that someone can provide to safeguard their money, they're going to lose money, isn't it? In these ups and downs after the change of US government. I know that before that, the market was very steady. You know that before this Labour government, there was a very big fall in the UK, and that was heated very hard all over the world. And now we have Trump, and those things is also affecting the market. So in between these things, how do you produce, or how do you safeguard, or how do you train your model to become intelligent?
Okay. To train the models, you have to have a lot of past data. And you have to parameterize this data. What it means you cannot squeeze into the data like Trump said something. No, you have to look at some parameters which are somewhat extraordinary, and they're describing some specifics, maybe in advance, so-called like leading indicators. If you look at the market conditions and then you're going to search for some leading indicators, then they do exist. For instance, if you look at the real estate market in the United States, then you will see that we are somewhat mimicking and repeating the conditions equal to 2008. Why? Because the number of houses on the market sitting for very long, somewhat equal to what preceded to the great crash in the real estate of 2008. So then how you can determine that relatively quickly is to look whether or not the stocks for the home builders going up or down. And then within the last few months, the prices of stocks for home builders is going down. Why? Because if you have a lot of inventories in housing, there is nothing to build, then stocks go down, and then it's becoming a leading indicator of what's going to happen. And if you look at the past data, then it turns out that every time when the home builders went down, in a few months, the entire market went down. That's a kind of one of the leading indicators. Another interesting leading indicator is the ratio of the prices of gold versus prices of silver. It turns out that if that ratio going up, then people are searching for safe harbors. And if we look at this ratio, then this ratio also was a leading indicator before this crash and announcements. And there is another one which is more advanced, that is yields of 10-year treasury notes, which is going to be able to help us whether or not there's going to be a recession in the near future.
That's a great explanation, Dr. Sergey. To all the viewers, you are watching Innovator Circle podcast. I'm Dr. Shah-Siddiqui, and I have Dr. Sergey from the Tickron, and we're going to be discussing more tentative questions today. So my next questions to you would be, who are the clients you aim to help, and what key benefits do you deliver to them?
Okay, so the main clients of our company are retail investors. And we have three groups of people who are willing to work with us. One group is do-it-yourselfers. So people who are willing to understand some tools and use these tools to their advantage. So that means it is not a very simple tools like what is there, like moving averages, some other simple indicators. It is kind of more advanced tools like we have like pattern recognitions. So people can come to us and use pattern recognitions. They can use trend recognition type of engines, and then can make conclusions based on their own kind of view of a market. Or they can use our screener, which is also advanced screener, which gives the hints of what's going to happen. We analyze the groups, we analyze stocks, we analyze forex, ETFs, and crypto too. Okay, so that's a one group, do-it-yourselfers. It turns out that some of the people who want to just follow some either smart people or get some signals from AI directly without much of a thinking. And that's a big group, and it's growing actually in Europe. One company, eToro, going to this group called copy traders. So what happens with eToro, they have people who are trading and other people are copying their trades. So that means the second group is copy traders. So for this group, we have AI agents or AI bots which are trading just in front of you. How they've been built? They build on top of our tools. These tools like pattern recognition, trend recognitions, screeners. So we actually created these copy trading capabilities just for exact purpose of people who don't want to get engaged with tools. They just want to do the copy trading. And the third group, which we're approaching right now, is the so-called delegators. So when the people say, okay, why don't you manage our money? And then we just don't want to get involved. And then we just going to manage their money as assets under management.
Mm-hmm. Thank you very much.
In the US, it's called like AUM model, which is assets under management model.
Thank you, Dr. Sergey. It will be very helpful for the people they wanted to invest in the future. So my next question to you, what makes your approach unique in helping clients achieving this success that you just demonstrated?
Uniqueness, I think, in our approaches of building these AI agents. So we believe when we analyze the markets, imagine like three scenarios, I will tell you. One is just buy and hold S&P 500. And imagine one chart, right? Another chart, you will take S&P 500 and remove the best days out of this chart. And all of a sudden, you will see that by getting out of the market on the best days, you actually underperform of just buy and hold. But the interesting point is that if you remove the 10 worst days out of the S&P 500, then you're going to outperform the market. So what does it mean? It means that if we have in our agents some ability to hedge worst days, like the days of the past week or today, right? Then we can skip the worst days of the market, and then we're going to be outperform the market. So the uniqueness is the smart hedging with actually inverse ETFs. Inverse ETFs are the ETFs which are kind of moving in the opposite direction. When the market goes up, then ETF goes down. And when it is the inverse ETFs, right? And when market goes down, the ETF goes up. So some of our ETFs right now up 25, 30% versus the market is down 25%. And this hedging is a unique capabilities which we trained our AI when you're going to get to the long position, and then you're going to get to the long position as a hedge. And with the hedge, you skip the worst day on the market. And that way you can outperform the market.
That's great because, when you talk about investments and when you talk about market trends and all of the things, it's all about digits, isn't it? The best way you understand the digits, the best way you're going to be turning your return back. And I think today, after this episode, all the viewers, they are in the investment market, they're going to feel confident the way they wanted to trade. And I think Tickron has that magic wand to tailor methodology, how you can invest thoughtfully. Thank you very much for today, your contribution. My next question are partnerships part of your business model? And from the perspectives of your collaborator, what benefits make you an ideal collaborator?
Let me kind of step back. On the previous question, I will just give simple rule of thumbs for people who want to participate in the market. So let's split these people into two groups at least, traders and investors. So what I'm telling people who are just investing and don't get involved heavily, then the one parameter they should look at is the VIX. It's a VIX, which is representing the volatility on the market. And if they see that the VIX went higher than about 20, then my recommendation in general is to try to reduce the long positions and stay invested when the VIX is like below 15 or somewhere below 20. So that means if they don't want to get involved, just look at least at one parameter, VIX. And if you're a trader, then you should be relying on this VIX, on volatility, and actually you can make more money, even though the projections for the next year, maybe for the next 10 years, that the returns are going to be very weak. So what we're doing is we're helping people to look at our website and gain the basic knowledge and collaborate with us, because in some of our tools, you can vote what you think on what's going to happen with the market. So that means there's a kind of crowdsourcing of ability where people can look what other people think and also make conclusion out of the crowdsourcing.
Thank you. Can you explain about the collaboration bit now? So do you collaborate with people, and what type of collaborator are you looking to get into the industry?
Yes, we actually do hire people who can create the new algorithms for different market conditions. So we like to hire really smart mathematicians who would be able to embrace our platform. I call it the FLM platform, which is the financial learning model platform, which is somewhat actually similar to what was created by OpenAI, ChatGPT. Before they became famous, they really developed a platform for creation of so-called LLMs. It's a large language models. And they created like thousands of them. And then when they introduced these LLMs to the market, then they managed to satisfy more people than they thought. With FLM platform, we have ability to train our FLMs on the different market conditions. So that means all the collaborators who want to work with us is those people who can develop more FLMs. And actually we have affiliate program which allows people to bring new clients for us. So there's kind of two types of opportunities.
That's a great explanation, Dr. Sergey, because, working in this industry, as part of my work and the company, we also develop different type of models, LLM and FLM, and over the top, I would say, on the ChatGPT or DeepSeek and all of the things. So when you work with industry specialism, like you wanted to embed data mining or you wanted to embed a data-driven decision, at that point, you just add on, it has to be built physically or by hand, isn't it? Hand-coded. And then train that model to produce the satisfactory results that you're looking for. So when you talk about these things, I think our viewers have a majority of our viewers going to be in the tech industry, and they will love to know more about what you do and how they can invest wisely, or the collaboration program that you have mentioned so far. So we're just going to go for a quick break now. So thank you to all the viewers for watching ICPcast today. I'm Dr. Shah Siddiqui, and I have Dr. Sergey from Tickron. For now, we are taking a brief break before delving into some fantastic insight. Stay tuned, and we will be right back.
Great conversations start with thought-provoking ideas, and a visionary leaders turn them into reality. Meet Dr. Shah Siddiqui, an entrepreneur, AI strategist, and business growth partner dedicated to helping professionals and companies push boundaries, innovate, and thrive to drive transformation.
Did you know that 92% of executives consider digital transformation and AI adaptation are essential for staying competitive in today's market? Furthermore, companies that use data-driven insights for decision-making also see a 23% boost in profitability compared to those that don't. Through ICPcast, we bring together the brightest minds in AI, business, finance, marketing, and other tangible fields to deliver strategies that drive measurable success.
Dr. Shah is the founder and C-level executive and leads multiple startups, including Gen Z marketing agency, Neurodivergent Business Consortium, NBC, Time Research and Innovation, TRI, and Green Threads DPP. He is AI and technology expert and helps businesses harness AI for scalability and efficiency. He is a sales and business growth strategist and the creator of the Sales Funnel Accelerator, SFA program, to guide C-suite executives to maximize conversions and revenue.
You might be surprised to learn innovation isn't just about your ideas, it's about execution. In fact, only 10% of companies successfully turn their innovative ideas into scalable strategies, while the rest struggle with execution. Businesses that focus on effective implementation rather than just ideation 3 times more likely to outperform their competitors. After working with industry leaders and disruptors, I have learned one thing: success isn't just about what you know, it's about how you apply it. That's why I created Sales Funnel Accelerator and ICPcast to provide actionable insights that you can apply right way to drive business growth and innovation.
Podcasting is now one of the most powerful tools for business influence, with 80% of listeners taking action after hearing expert insights. And when it comes to driving sales, 78% of social sellers outperform peers who don't use social media for business networking.
Are you ready to be the part of the conversation that is shaping the future of business? Let's explore innovation, strategy, and leadership together. Book your cast with me today. Hello, everyone. Thank you for joining Innovators Hub podcast. Welcome back. I'm Dr. Shah Siddiqui, and I have Dr. Sergey from Tickron. We have got some exciting insight coming up. So stay with us, and as we dive deeper into the world of finance, technology, innovation, and investment, let's get started. So thank you, Dr. Sergey, for your contribution today. And I think today the viewers going to be learn some insightful elements from this session. So my next questions to you, could you share your insights on upcoming industry trend and how you are adapting to remain ahead? And you know that it is very critical for those people, they're going to be watching this episode and they're investing.
Okay, I think right now everything comes down to amount of the calculational power we have. We did not invest billions of dollars as the ChatGPT did, OpenAI, but we do have quite a lot of calculational power to look at the data in the past. Obviously, people say, yes, past performance does not guarantee the future results, but we're approaching this from a mathematical standpoint. We're looking at the data and say, okay, what are the chances that you're going to be profitable? So we're not saying, never say it is 100%. We never say guaranteed. But imagine like AI is going to tell you your chances that the stock is going to go up like 80 or 70% versus the chances it's going to go up 30%. So it is similar to like you're watching baseball or some other games where you are presented not only with players, but also with the statistics, right? So like how many times it will hit it right, or what the number of goals and this and that. So you kind of look at the statistics. So what we do is we look at the past results and analyzing, okay, what are the conditions took place and what were the results? And with this knowledge, people then can enter some trading or investing positions in a much more smarter way. And what we say, okay, we can call it like odds of success. So what are the odds of success? The market is going to go up right now. And then our machine goes and then calculates based on the existing information and then says, okay, these are the chances. And you are the one who can decide if you work as a do-it-yourselfer. But if you're as a copy trader, then we actually incorporate this knowledge of the chances, and then our machines are making trades, and you just copy these trades. And then if conditions are going to change, then we quickly change positions and we can sell quickly. So that means in our business, the machines these days acting much faster than people.
That's a great explanation, Dr. Sergey. So my next questions to you: can you discuss a major obstacle you have overcome and lessons you have applied to your professional approach
In this company or overall?
in this company or overall?
Yeah, which we've been solving and actually already resolved is the connection of our algorithms and AI, our FLMs, to the brokerage. So it turns out that even if your algorithm is good and you can do the manual trades, then the execution of this trade in automatic mode is somewhat a challenge by itself. So for instance, the machine, the algorithm sends the order to buy. But the broker right now has this number of stocks, number of shares, and then machine says, okay, I bought 60%, the extra 40% went for the different price. And imagine now you are sending this type of signals hundreds and thousands of people. So what we encountered and saw that the managing the entry points for thousands of people is a challenge by itself. On top of the algorithm. And the execution phase took us much longer than expected for testing. So we had to test quite a lot of different scenarios on execution on entry points for hundreds and thousands of people and exit points, because you have to remember when everyone entered a position. And if you want to make it properly and fairly, then it was quite a challenge.
I totally agree with you, because when you work with data, and if you do not understand what it's going to predict the future, I would say, and you do not have the data to back you up, it's a challenge. And when you are that just you mentioned that you're not dealing with one or two, you're dealing with thousands of requests and thousands of things. So at that point, if your model is not clever enough, then mistake could happen. So thank you very much for joining today's live webinar, a podcast, and we are getting some very good insight today. So my next question to you, can you share a particularly rewarding project or client success stories that highlights your impact?
Oh, yeah, we have customer support. Actually, writing, I get the feedback during my webcasts that they trade more confident, because if they enter the position with the knowledge of the confidence level or odds of success, then they can wait for the exit much longer, because AI helps them to perform better, and they are not have that anxiety something went wrong. Okay, so the main problem of people who are trading is their emotional element. So in order to help them with that emotional element, you have to rely on somebody, and it's almost like somebody has to hold your hand, right? So our contribution is helping people to be not overstressed in the market conditions. And then we see it, as I said, through the customer support, from my conversation with people. And when we ask people, for instance, how did you learn about us? So one of our items is like a friends and family told them about Tickron. So this item is also quite interesting, and we see how many people are referencing to our website for the help.
That's a great example, Dr. Sergey. Thank you very much. Because, when you talk about investment, when you talk about working with someone, if you do not feel that they are your family members or partners, it makes life hell, because you have to feel confident and you have to feel comfortable, both two things, to come up with a solution or come up with investing more. So thank you for adding this excellent example. So are there any misconceptions about your industry that you like to address and clarify to the audience today?
Yeah, I think one of the biggest misconceptions in this industry that you cannot time the market. And financial advisors promoting only one concept is to buy and hold, and once in a few months to reallocate. And as I said, if you do not want to get involved heavily, that's not a bad approach. But for those who want to get involved, you can outperform the market if you have enough of a calculational power to crunch the algorithms, or if you can rely on something which is going to help you to be more confident, and you can hedge with the timing and avoid the days similar to the day today, or a few other days after the Trump's announcement of the tariffs, right? So if you can do that, then you can overcome the misconception of timing the market. And I think that's the biggest misconception, that you cannot. If you are not involved, you cannot. But if you're involved, you can.
Thank you for adding this explanation to the viewers. I just wanted to add you another questions related one. Like, the market is not settled now. So I regularly watch news and stock markets on all other things. How do you keep yourself calm? Because I have seen that over $1 trillion was away from the big companies like Nike, Apple, Amazon, and a lot of other people. So if people are investing to big giant corporations and the market is not settled, what should you do?
Hedging is the best approach to be confident, because if you're hedging properly, then your account is not supposed to go down like 10, 15, or 20%. So with the hedging, your account might go down, but with the proper allocation can even go up when everyone goes down. So when you look at the performance of a portfolio, and if the portfolio is properly hedged, which means we focusing not on options, we do not do options, but we do work with inverse ETFs, which are very liquid, and they allow to maneuver with algorithms very quickly. So you can quickly enter and exit a position without really a big time decay, which exists in options. So to be calm, you have to be prepared with the proper approaches to the market and the hedging capabilities. So if you somewhat balance, like a lot of hedge funds do, so if you look at the ratio of long position versus short positions, so right now the number of hedge funds in short positions greatly increased. So why they're doing that? They're hedging their long position. And that way, your overall account is not gonna go down as everyone else. So that's the main benefit of approaching these cases as a trader. If you are an investor, then there are other ways of long-term hedging, like options, like you can buy put options, and also be on the safe side. Or like I have some friends who asked me, should I get out with my entire 401k plan? I said yes. And they left the market, let's say 2-3 weeks ago, and they're asking me again, when should they get back? I said, okay, watch for VIX. If VIX are going to go down below 20, below 15, then you might consider getting back to the market, but not as it is right now between 40 and 50. It doesn't make any sense.
That's a great explanation, Dr. Sergey. So to all the viewers, you're watching Innovator Circle podcast, and I'm Dr. Shah Siddiqui, and I have Dr. Sergey Sevastuk from Tickron. We're going to be having some more discussion today. Before I jump into my personal questions with you, I just wanted to ask you, what advice would you give to inspiring entrepreneurs looking to make a mark in this field?
Okay, went to mathematics right after the high school because mathematics is everywhere. You go to groceries, you need to know math. If you're doing physics, you have to know the math. If you in the biology these days, you have to know the math. All AI is built on the math. But not everyone is inclined to be mathematician, but there are obviously some period of times of different demands for different skills. And I think these days, those who like mathematics, like getting involved with artificial intelligence and AI, that's the best place to be at this stage, because you can apply AI then pretty much everywhere. And that's going to be applied pretty much everywhere. Would be a lot of agents who are going to be helping elderly, helping with investing, helping with the weather. There's a lot of opportunities as long as you really understand in mathematical terms what these tools are pretty much doing. Even if you're in the biology, even if you're in the studying genetics, then without mathematical tools, you cannot really embrace properly and fully all advances of contemporary science.
Thank you very much, Dr. Sergey. In each episode, we ask some personal questions to our guest at the end. And I wanted to ask you, apart from your genius brain working with mathematics, AI, and all other things, what else work do you do? Like cooking, traveling, maybe gossiping? What you like most apart from your work?
Back in the college times, I learned that the fittest survives, particularly in the United States. So from early years, I like all kinds of sports. I tried so many different things, and I like still do a lot of sports like running, jumping, scuba diving, tennis, pickleball, you name it. I like it. Why? Because it gives my body and my mind total switch from the passive activity with the computer. I like to be engaged with something physically. And that's kind of my main hobby at this stage. Obviously, I like a lot of other things, but right now I'm placing priority on a lot of physical exercises, all kinds of stuff.
That's
kind of my hobby. And actually, I was champion of Moscow in wrestling. So and that's where it's coming from. So in the college years, I was a champion, and since then I never dropped the ball in sports activity.
That's great. I just wanted to ask you what you hate most.
Oh, I hate most the stupidity. Stupidity, and when the people are lying and thinking I'm stupid. The one of the reasons I left Russia, like right after the collapse of the Soviet Union, the amount of the lying they do. So one can say, okay, do politicians lie in, say, UK or United States? They do. And from a mathematical perspective, everything comes down to the amounts of lying. So if we look right now at the Russian Federation, then it is like 95% of lying to the public, not allowing people to have different opinions. Nobody checks their opinions. The government owns the mass media, right? That's kind of one amount of lying. And here politicians do lie too for their populistic purposes, but then I can switch the channel and then another opinion, and can read something as a different opinion. And that's then I say, okay, some people do think differently, and I don't feel stupid. So I don't like when the people lie, and I don't like when the people treat me as idiot, thinking that I'm going to buy into their stuff.
That's a great explanation. I'm just laughing out loud because, yes, we have stupid people in our community. Maybe they are academics, maybe they are politicians, maybe they are whatever they are. It doesn't matter really. But the main question is that you can verify that with different sources. That's a great example. My next question to you, if I ask you to engage with some extracurricular activities like charity and all other things, so I give you £1 million, what you do?
I did participate in the charitable activities and contributed to one of our foundation called Making a Wish Foundation in the United States, where this foundation takes the money, and I participated that from a Ferrari owners group. Then they find kids, which those kids are pretty much either have a very severe problems, health problems. Some of them pretty much on deathbed. So they're asking these kids, what wish do you have? So from the history, some kids say, oh, I want to meet Michael Jackson. So they take the money and then go to the famous people or the famous activities and then helping kids to really feel great, even though they have a tough life. So this type of charitable contributions I like. They allow people really feel that the life is going on and they could be participants. So we've seen a lot of interesting cases when this type of a contribution really changed their entire lives for the better.
That's fascinating, the work you do with the charity. Thank you very much for adding your value today to our channel. My last questions. Do you want to add anything else to the viewers?
Takeaway pretty quickly. Remember that the stock market is having only national league. And if you remember that, as soon as you press the button buy or sell, you are playing in the national league. In the national league, that means that a lot of people want to take your money. And a lot of apps which in existence, they are based on rerouting your orders to those who are professional in this league. So make money like Robinhood and some other brokerages, they're rerouting retail type of orders to big companies which are taking advantages of these orders. So what I'm asking your viewers is to be smart and say, okay, I'm not going to be buying or selling or trading on a hunch. When you're on a hunch or you're emotionally involved, most likely your orders are going to be together with the crowd. But if you're smart, you could be taking advice or take a direction, knowing the confidence of that direction, and then you're going to be better off. Don't go with the crowd. So there's a lot of contrarian type of scenarios. And in order to do that, you have to be with somebody who is calculating for you and presenting the data with you. That's, I would say, important element of understanding. You can lose very quickly and very fast.
Thank you, Dr. Sergey. Thank you, everyone, for joining today's podcast. And I hope you have learned something from this podcast. If you wanted to learn more, please stay tuned to our other episodes of Innovator Sergey podcast. And we're going to be bringing more guests. And we're going to be in the future, maybe we can bring Dr. Sergey back. And please support our work. So today's conversation with Dr. Sergey has spurred fresh ideas and providing valuable insight to elevate your business strategies, whether it is in sales, marketing, finance, or investment. You can invest if you have a right decision-making tools like Tickron. So when you invest, think about what you are doing. Don't forget to subscribe to our newsletters on ICPcast.com. Share this episode with your network. Leave us a review, and it helps us to reach and inspire more leaders like Dr. Sergey. Like our page on LinkedIn and subscribe to our YouTube channel, Sales Funnel Accelerator. And behind the scenes success content and contact with Dr. Sergey, you can always reach him through the social channels, LinkedIn and social media. Until next time, stay inspired, stay curious, and keep the leading way in innovation. Thank you. Thank you, Dr. Sergey. Bye-bye. In each episode, we will bring C-level executives to talk about their business journey and guide you through how they have succeeded on their specific role and business. Then we can create together the business growth that you're looking for. Hello, Shivam. Thank you very much for joining today's. Could you please provide a brief overview of your business?
We work as integrated teams across advisory, assurance, tax, outsourcing, talent solutions, and private client services, bringing forward the best thinking and personal commitment to each client that we work with. If a client is not happy, we're not happy. So we always do our best to think what's next for the client and advise them as best as possible.
I have tasked humanities, I have tasked film and television, software development, business development, and then AI. Could you discuss the key issues in your industry?
I think pre-pandemic assignments were pretty traditional, short-term, long-term business travel. I think post-pandemic with remote work and hybrid work, it has been a real shift within the industry in global mobility and people choose that flexibility a lot of the times now. And the companies, like I said, which have adapted to this, which have updated their policies and their procedures are the ones that are flourishing, and they're able to retain talent.
If you are a grown-up companies and you need to grow your business beyond the capacity, think about the worst case scenarios first, because that's just down the line. You don't know, and the mishap will happen, and the money you will lose, that's enormous. So think about the negative first, then think of the positive.
As well as in that foreign jurisdiction. So I make sure that these individuals are filing the proper forms, which are extremely complex, and making sure that they're done properly. A lot of times people travel across borders, or companies send people across borders for work assignments, and they really forget about liabilities or the obligations that they're triggering for their employees. And I think it's really important to educate these individuals as they have this business travel or short-term or long-term assignments. That
most of our businesses in the US and UK and global, they suffer from taxation problems. What makes your approach unique in helping clients?
But I really try to look at further down the line for them. What's next in their journey? What they might need now might not be what they need a couple of years down the line. And I try to educate my clients on what to look out for next, not just in the present. And that could probably have been avoided if planning was done up front for them for what would be something that they would require in the future. And making sure that companies are educated about this is really, really important. I am caring for them as I would myself, as I would my family, as I would my friends.
Whenever you work in any business, your business or my business or any other businesses, it is the core success if you understand your clients and solve problems.
Sometimes companies are growing too fast and they require more capital. They're investing in software, AI now. My team here at Qualifi, our team, we're taking all the lessons learned and all of the experience from the last 3 to 4 companies and rolling it all into Qualifi, which is going to be our biggest invest yet.
The way you described, sometimes when people, they reach the top peak, they do not recognize where they come from.
It's how you learn so you don't make that same mistake the second time. And you just, as long as you don't quit, you never fail. But those little tiny failures are your lessons learned. That's what's going to make you such a smarter and better entrepreneur. Take that action, because the action will create the motivation. And from there is all the learnings, and that's where your journey begins.
I totally agree with you, because I have disabilities. I am in the autism spectrum, in Asperger's. I am dyslexic. I have a brain tumor surgery. I born in a rural village in Bangladesh. Hello, everyone. Thank you for joining today's Innovative Circle podcast. I'm your host, Dr. Shah Siddiqui, founder and CEO of Time Research and Innovation, Zenzi Marketing Agency, and Tadbot AI. As you know, ICPcast is an initiative to bring innovative ideas, transformative strategies, and forward-thinking insight from various industries, whether it is in technology, artificial intelligence, marketing, finance, lead generation and sales, business advisory and development, tax and accounting, or sustainability. We have all covered. We bring you insight from some of the brightest mind, C-level executives, and industry leaders who are shaping the future. In today's episode, we are thrilled to welcome Eddie De Angelis, founder and CEO of Qualifi. Qualifi is a business finance company, assists small and growing businesses in obtaining swift and flexible funding without the burden of corporate bureaucracy. With over 25 years of experience and 2 successful acquisitions under his belt, AD specializes in business team loans, lines of credit, equipment leasing, and invoice factoring, offering funding up to $75 million. He is known for his relationship-first approach. Eddie has built trusted relationships across the lending industry in the US. Through Qualifi, he is on a mission to help business owners boost cash flow, consolidate debt, and grow with confidence. We will discuss how to qualify and empower business to grow faster without wasting time on bureaucracy today. So, to all our viewers, get ready for practical strategies, insightful discussion, and fresh ideas to help you grow, succeed, and make an impact. So we have our guest, Eddie. Thank you very much and welcome to Innovator Circle podcast. How are you today?
I'm doing great, Dr. Shah. Thank you so much for asking, and I appreciate you welcoming me on the show.
It is great. And Eddie, this is just a formal conversation. So we're going to be premiering it to LinkedIn and all of the social media. And we will have people, entrepreneurs, and problem solvers, basically, to watch this episode and learn from your experience and expertise. So this entire episode is designed to ask you many questions, 12 of them. And each question is designed to get insight from you that you have achieved the successes and how you solve your problems. So thank you again to joining this podcast, and to viewers. We will have a very interesting session today. So my first question to you, could you provide a brief overview of your business and share what inspired you to enter to this field?
Absolutely. So thank you for having me, Dr. Shah. A brief overview of Qualifi. We help business owners that are maybe struggling with the ins and outs of conventional bank financing. They're either having issues getting approved from their bank because conventional banks have lots of hurdles you have to challenge and red tape to go through, whether it's profitability, personal credit, time in business, debt to income ratio, all those hurdles. And in many cases, business owners, probably 80+%, I think it's safe to say, do not qualify for conventional bank financing. So they have to look elsewhere into the alternative market. So we specialize in that entire pool. There's another significant percentage of businesses that have conventional bank financing and they're preferred borrowers, excellent credit, good time in business, good performing businesses. But there's a few situations there where they may have a line of credit with their bank and they're maxed out. And conventional banks are very conservative on their risk perspective. And sometimes companies are growing too fast and they require more capital. They're investing in software, AI now, that's a big investment for a lot of businesses. They're investing in equipment and they typically need to borrow more money. They go back to their bank and the bank says, no, unfortunately, we're capped out, or you don't have enough assets, or whatever the reason is, they're kind of capped at that maximum limit that the bank set for them. So then they turn to the alternative market. So we basically specialize in helping business owners that are kind of capped out at the bank, or maybe termed out at the bank, or can't get bank financing to begin with. So we specialize in about 10 to 12 different products. I'd like to say that about 60 or 70% of our entire portfolio is based around lines of credit. We do them secured and unsecured. So some of them, when I say secured, meaning attached to like secured by accounts receivable or inventory or possibly equipment. So we can do an asset-based transaction anywhere from a couple $100,000 all the way up to, the max is probably up to 100 million. Although we don't do $100 million deals every day as much as I'd love to, but we do asset-based transactions. And then we also have like unsecured lines of credit that are uncollateralized. So where business owners that may not have a bunch of accounts receivables, maybe they're in the e-commerce industry, or they just don't have any hard assets, as long as they have fairly decent credit and good cash flow, we're able to give them a cash flow driven credit and cash flow driven lines of credit. So we have lots of line of credit options that are available for many scenarios. We have a lot of other products as well, but line of credit, I like to lean with that one as our first choice because it provides a business owner so much flexibility than some of the other loan options that are out there, because you're only paying interest on the time that you're utilizing the funds. You could pay them back at any time. So if you need money to bridge your accounts receivable, or you're just falling short on your payroll, you can dip into the line of credit, take a draw, pay it back in a couple of weeks, and only pay interest for a couple of weeks. So tons of flexibility with the lines of credit. I like to say that that's our specialty, but we do have a lot of other products. So we do SBA loans. SBA 7A is the most popular. We also have an SBA Express. We do 5 to 10 year term loans on the business side. We can do equipment financing is another good product for us. Typically 5 to 6 year terms, 100% financing. Equipment financing, we do some real estate transactions, which could be either some of our business owners are maybe renting their office space, looking to purchase a building, either a new building or purchase the building that they're actually operating their business out of. We can do a new purchase. We can do cash out refinance. Sometimes a lot of our clients come to us with a need for capital. They're looking to consolidate debt. Maybe their business is struggling a little bit, or they're just looking to grow. and they have a lot of equity available in real estate, in investment properties or their business property. So we're able to do cash out refinances as well with conventional bank rates. So we have a lot of different products that are offered. There's other products as well, but most of it's centered around lines of credit and term loans where businesses are just looking for capital to grow or to bridge some short-term cash flow gaps.
Thank you very much, Eddie. I just wanted to ask you the connected questions, like what inspired you to become who you are now? Because you might not have started here. Can you tell us the story behind the scene?
Yeah, I don't think we have enough time on the podcast to go through my whole personal story, because once I start there, it's going to take a little while, but I'll do the best I can to try to do some cliff notes. So I certainly didn't start where we are today. I grew up very, very poor with a family that has had some issues with drugs my whole life. Both my parents, who are passed away today, God rest their soul, and some siblings, my sisters. And, growing up was a little challenging, right? We didn't have many means and just had to, learn survival instincts and how to, just go a different route. And I managed through the grace of God to never touch a drug in my life to this day. I'm 58 years old today. And I just didn't want to go down that road that I see so many in the neighborhood that I grew up in. So for whatever reason, God had a different path for me. And I didn't really get into business until I was probably in my mid-20s. Had a couple of jobs, worked at United Parcel Service and left United Parcel Service. And I started my career, believe it or not, accidentally. I didn't know I had any talent in sales or any God-given talent. I was at a cheesesteak local place in Philadelphia, one of the world famous places. It's a landmark, Pat Steaks and Gino Steaks in South Philadelphia. And a little old man pulled up with a car, popped out his hatchback, and was selling these imitation perfumes and colognes.
Wow.
To make a real story short, I purchased a bunch of them for myself. They were like $3 to $4 or $5 a piece. I bought a bunch of them for myself, took them home. They were so good that they smelled exactly like the real thing. And I went back and ended up buying more and more. And it just started snowballing. I started seeing potential that, hey, I could sell these to all my friends and my friends' parents. And I started like a little side hustle for myself. And I started just this little cologne and perfume business. I made flyers and I was passing them out to all my friends and I was spraying everybody. Hey, here's a free sample. Smell this, try this cologne. It's amazing. It's all the big name brands like Eternity, Calvin Klein, White Diamonds for women back in the day was the real popular one. And from there, I just started growing a little wholesale retail business and it just stemmed from there. And I started seeing opportunity. I eventually took a trip to New York to find out, once I started doing a little bit more volume, I wanted to purchase the wholesale price, not off the guy on the street corner. So I went to Manhattan one day in New York City and found out where they sell these product wholesale. And then I just started buying bulk and started shipping it back and forth and really grew it into a business. I shortly opened up I started actually outside a welfare office in Northeast Philadelphia with a couple milk crates and a table of perfumes, and then grew that into a much bigger stand with other merchandise. But when I went to New York and Manhattan, as you may or may not know, it's the world of opportunity. There's hundreds and hundreds of stores and direct importers. You see all these different products, whether it's perfume, it's watches, it's jewelry, it's apparel, clothing, plants, anything that you could possibly think of selling. If you want to be in business, it just opened up the world of opportunity to me. So I end up bringing on other products. I got into apparel, I got into costume jewelry, watches, and I started building up a big retail, wholesale, general merchandise business and called it Perfume World at the time because I started with the Perfume World. I eventually rented a little store and had my own home storefront. And then from there, within 2 to 3 years, we were doing over $1 million in revenue. Just like that, we're in business and with very, very little money to start. I mean, I must have started with $35 purchase on the Park Plaza colognes that I was selling. So built that up from the ground up, just learned as I went into that business. Getting into the apparel part of that business eventually years later led me into the screen printing and embroidery business, which I spent about 17 years in before selling the company in 2015. And, I'm learning again. It's my kind of like my second business now, a whole different industry altogether. I'm working with business owners that are doing a lot of promotions and a company apparel. They're looking to give promotions away for whether it's good client promotions or holiday promotions for employees, and company apparel and service wear that the employees are wearing their uniforms and such. So I built a really big business in the screen printing and embroidery for the next 17 years, which was making me a nice stable income. And I couldn't really get over the hump. I was the entrepreneur that was felt like I had to do it all. I didn't have much coaching as an entrepreneur, right? There's no school that I went to or any kind of coaching on how to run a business. So everything I learned was hands-on. And I feel like that's the best way to just dive in and just do it. And you learn from your mistakes and you learn as you go. So I was doing the majority of the work and feeling like every big order I had to take, I had to make sure the screen printing was done right, the artwork was approved right. So I was probably spinning a lot of wheels and not really able to really scale it into something really, really big. I just wasn't at that point in my career yet where I had those skills or learned how to delegate and really scale and how to scale a business. So back in 2013, an opportunity came my way from a very good friend of mine that was in the finance business that he was on consumer lending. And he wanted to get into the business financing side, which is the business we're in today. And I kind of never wanted to work for anybody because I've, worked for myself, 20 years back then. And I just felt like at the screen printing company that I had, I just felt like I wasn't challenged enough, or there was just something more. It was a gut instinct. I just felt like there was something more. So he offered me an opportunity. I wanted to kind of learn more and do something different. And I just felt like it was the way to go. And I took a shot. I took it on from scratch. I was president and partner of that brokerage firm, small business finance, what I'm doing now. And we had to learn and build it. It took me about a full year to really know what I was doing and learn. So I knew I was, pretty good. And that's when I kind of sold the screen printing company. And I knew I was all in for finance. And I kind of found my home once I really got in and learned the finance industry. It felt like it was meant to be, and it was what I was meant for. So just helping business owners, helping them secure capital and helping them grow their business, getting to talk to business owners every day and understanding all the different industry types, how they make money, wholesale, retail, residential, commercial. I really enjoy that. And I listen and I understand, and I learned so much from our clients that we have today and that we've spoken to over the years. So it's like a natural passion now. We're really passionate about business. We're really passionate about growing and scaling and helping more and more business owners. So we started this finance company. I was president and partner. I stayed there for about 3 years. The business owners, the main owners that hired me to build the company up, decided to open up a funding company, a couple of years into the process. And it kind of like sidetracked where our two goals were in our original plans. And we decided to part ways after about 3 years. It was in December of 2016. So here I am now after selling my business for 20 years, not much security per se. And I think age maybe 46 or right around there. I was faced with having to start all over again. I have a wife, 3 daughters, and a family and a lot of bills and a little bit of a scary time. And 3 months later, I decided to open up a small little shop for myself called Amerifi LLC. And that was my business finance brokerage. So this was my company. Started from scratch with like 2 or 3 employees that were, that came with me from the old company. And we started building it up and just started diving in head first and just, plan B is make plan A work. And that's always been my philosophy, right? You have to make it work and you got to learn and you just got to keep working hard enough until it works. So fast forward into Amerifi, we started doing really well in the beginning. We started hiring from like 3 to 5 employees up to about maybe 15 at the most at the time. And business was growing. We're doing good. We're building up our own book of clientele. And then 2.5 years in, I get a call from a friend of mine and was working at a very large company out of Utah, corporate company with like 200 employees. They were looking to acquire a sales office for their business finance tech company that they have, which was like a marketplace for lending, but they didn't have really an internal sales team. Felt like I was on The Bachelor. They were looking at like 30, 35 different shops all over the country. So it didn't really pique my interest in the very beginning. And to be honest with you, I finally had Amerifi going to where I was very self-sufficient. I was making a good income and I loved what I was doing. I didn't have any bosses and nobody told me what to do. So I was in a really good spot. I wasn't looking to sell. I wasn't thinking about selling or anything like that to be acquired. And, conversations just started going and my buddy kept reaching out to me, asking me can you send me this report, send me that report, can you send me some of your data out of Salesforce? We're asking a lot of questions about the business. I started doing a couple of Zoom interviews with him. We met in person, we went to lunch, and all of a sudden things just started progressing. And as we went through, a couple of weeks and then a couple of months, he started telling me that the owners really like your numbers. They like what you're doing. They love our interests. We're very aligned because we're in Qualifi, our new company. We're 100% aligned with, we do what's best for the business owner. That's our business model. That's our pledge to our clients. And I tell all of our reps, you can never go wrong by doing what's right for the client. because that's the business that's going to stick with you, stay with you, trust you, and you're going to build long-term relationships from, right? So we don't lose sight of that. So the company that acquired us was called Nav Inc. out of Utah. They were very much the same business model where they put client first. It was all about the client experience. So fast forward, we went through rounds and rounds of talks, interviews, Zooms. They invited us out, me and my partner at the time, Gus, and we went out to Utah together. And things just progressed. We loved the team. We loved all the people. They were so genuine and down to earth. It wasn't even like, you would think like a big, type of acquisition like that. It would be a lot of like attorneys and accountants. It just wasn't like that. It was just everything flowed great. And we felt super confident with their management team. They felt super confident with our management team and what we were doing. And it just seemed like a really good fit. So as it started getting in, it was down to like 10, then down to 5. And then kind of it just, landed to where we were the shop that they chose, which I was very humbled because they were looking at some really large shops as well with, larger companies with 50 plus employees, 50 plus sales team. And, we were relatively a small shop at the time. I think we had 8 funding managers at the time. So all went well. We decided to do the acquisition and move forward with Nav in late 2019, right before COVID hit. So that was another godsend, getting acquired right before the pandemic hit, because that would have been devastating to a small business like myself. So we did the acquisition, went with Nav. We stayed in our office in Pennsylvania. So not much really changed for us. And my role there was pretty much the same as it was here, but my title was head of finance operations. So I was still running my sales office and funding deals and, looking for the big deals and looking to grow Nav's portfolio as well. And stayed there for about 3 years. And things were great. We did really good there. But what I really got out of that experience is it's my first time being part of the corporate stage and being in the corporate, seeing how things run on a corporate level, right? All the different departments and all the different managers and all the different executives and what it's like to get a decision done. And if you have to hire someone, what's the process, understanding systems and processes, understanding coaching and training and all that. So I learned a real lot, and that was a really valuable lesson for me that I think today, fast forward to where I'm at with Qualifi, going through those 3 companies and this now being my 4th in finance, it just set us up for a whole different mindset and a whole different level of like expertise that's making me so much better of a CEO than I was 3 years ago, 6 years ago, 10 years ago. So what I typically like to say is my team here at Qualifi, our team, we're taking all the lessons learned and all of the experience from the last 3 to 4 companies and rolling it all into Qualifi, which is going to be our biggest and best yet. And things are going amazing with our new company. We have about 20 employees now, 12 funding managers. And over the last few years, we just hit a major growth spurt, which we'll talk about in more detail. But I know that was a long rant, but that's the cliff notes of the story to sum it up in about 10, 15 minutes of where we are today in Qualifi. And I'm happy to answer any more questions that you guys have.
It's fascinating. It's mind-blowing, I would say, the way you described. Sometimes when people, they reach the top peak, they do not recognize where they come from. And that's, I think, is not a good thing, because if you forget about your roots, you are not the person who you are right now. So thank you very much. I'm glad that you have given enough information for our viewers to know a person born in poverty now dealing with 100 millions worth of finances. So that's quite huge achievements, I would say.
I love stressing that too, because coming from nothing, not having any financing in place for myself, or not having, my parents leave me a bunch of money when they die. So, and again, I will never forget where I came from, because I love the giving back portion of it. And we'll talk about a little bit how Qualifi does that as well. But just being able to help others find good employment, right? I'm hiring now, so I'm giving people jobs, really good jobs in a great industry that's thriving. And we're creating jobs, we're creating opportunity, we're giving back. So I always will remember where I came from. And part of that is who I am. And that's what makes me who I am today. I don't have a college degree. I did spend a year in LaSalle University, but I took up computer programming because I was like a computer nerd back then. And I thought I was going to love it. And I totally hated it. I just left after 1 year. And then, like I said, shortly after, the rest of the story. But yeah, building all the businesses that I've had, I've never had any investment capital. So for anyone out there that's curious and thinking and afraid to make that move, I see so many people that I'm friends with today, and people that are they want to make a move and they're just afraid. Well, what if I fail? What if I fail? You want to fail. You're going to fail. It's those little failures. It's embracing those failures is how you learn, so you don't make that same mistake the second time. And you just, as long as you don't quit, you never fail. But those little tiny failures are your lessons learned. That's what's going to make you such a smarter and better entrepreneur. So for everyone out there, that's where I say, go for it, right? Just like Nike says, go for it, just do it. And take that action, because the action will create the motivation. And from there is all the learnings, and that's where your journey begins. So, yeah.
I totally agree with you, because, when I talk to people, I have disabilities. I am in the autism spectrum, in Asperger's. I am dyslexic. I have a brain tumor surgery. I born in a rural village in Bangladesh.
Wow.
And my father died when I was 4 years old. So my mother, we were 11 brothers and sisters. My mother nurtured ourselves, and we are all brother sisters were established. One of my brothers is in the US, I'm in the UK, my sister in the UK, and all other siblings, they are established of their own. So you can see a person, a mother, devoted her lives after my father died. And I'm proud of that. I'm proud of my mother.
Absolutely, as you should be. And that's an amazing story. God bless.
So I'm proud of my mother, because only for her, I'm here. Still, she's alive in Bangladesh. She used to live with me in London, but she left. She doesn't want to live here anymore. So she lives in Bangladesh. Every week, I talk to her a couple of times, and she always said, okay, I'm the youngest one in all of my brothers. So she just behaved like me. Are you okay? So she sees my face and she will say, you are not okay. I know that. What happened? Tell me. She's 85 plus.
Wow.
So, I'm here only for her. And I'm proud to say that it doesn't matter that I'm doing lots of good work, I'm in a greatest positions and all of the things. But if I forget my roots, I'm not the person that I am. So
100%.
thank you very much.
Yeah, so many people out there, when they become successful in that aspect, they do forget their roots and they turn into different people. And that's another thing that I've learned that's very important through my journey with the corporate world with NAV is culture and business culture, and how important it is. So we take our culture very, very serious here. And we do not hire people that don't fit our culture. And we have an incredible culture. And, that's just one small example of one little piece that we focus on. But our atmosphere is everything. Our coming to work and our employees loving our job and loving coming to work every day and actually looking forward to it versus dreading waking up on Monday morning and going into the office. And that's so important. I mean, when I see people coming in with smiles on their face and, talking around in the morning, having some fruit and a cup of coffee and just shooting the shit, basically, I love what we're building, and it's just what fuels my passion. And I love it, seeing it come to fruition like it is.
You were saying now today, I haven't met a guest like this you before. So I think I'm going to be bringing you more to my podcast to talk about the culture, talk about different things. But
yeah, we won't get it all in today for sure, but I'd love to do that, because there's so many little parts of the business, which we'll talk about further. Of each little part of the business I treat as a business, and that's one of the biggest lessons that I've learned.
I totally agree. So I'm just going to jump into my next questions.
Sure.
Could you discuss the key issues in your industry and explain how your efforts are making a difference for your clients and collaborators?
Sure. So key issues in the business finance industry, I think, over a whole, if I had to choose one, I'd say from a client perspective, right? It's all about the client and their client experience. Is the business financing industry can be very challenging, and it could also be very messy if you don't have the right guidance, right? The reason I started with challenging is because we talked about the complexities and the red tape with conventional banks, right? Conventional banks are looking for clients and borrowers that are preferred, right? They have 2 to 3 years or more time in business. They're profitable year over year. They have 700 plus credit on the personal side. They have assets to back up any type of loan. In most cases, any type of serious money is typically required to be backed by accounts receivable or inventory, equipment, real estate, personal guarantees, the whole 9 yards. So unfortunately, in our world and in our country, there's thousands and thousands, and if not millions of businesses that are just starting out, and they're 1 year in, 6 months in, 12 months in, 18 months in, and they don't meet all the criteria that the conventional banks have. So one of the issues is financing that to be able to grow and speed up your growth versus having to do it like I did, selling perfumes on the street corner one day at a time and just keep saving your money and buying more and more and more. Sometimes having some available capital will speed and help you do the things that you need to do for your business, hire some employees, get some employees on payroll, and just, million uses of capital that you can use to speed up your business to where you need it to be. So the challenges are the conventional banks are very, very tough to get secure capital for. And when I say messy, when you go to the bank and you get declined as a business owner, obviously, where do you turn next? Right? There's not stores on every corner front outside conventional banks saying we offer financing, right? So they go online, and that's what the market has over the last 15 or 20 years has really driven the alternative lending space. And that's where we thrive and live in. But it's not all peaches and cream, right? It's very messy for business owners. They'll go out into the market. You'll go on Google or they'll click on an ad and they're interested in business financing. And some of these ads might have 4 or 5 brokers that it might be like a lead generation form where they fill out one form thinking they're going to get to speak to somebody. Next thing you know, they have 5 different brokers calling them, emailing and texting them, all telling them different things. And a lot of them are very aggressive. In some cases, it's almost like the majority of them could be what you would call aggressive. And where I say it's messy is what we've seen, that when a lot of clients come to us, sometimes, unfortunately, we're getting them after they've already went into the market and found another broker online or found the lender online, and they accepted the first offer that came down their way, feeling that that's the only thing that they qualified for. And they took the offer, and now it's the cash flow, the payment's too high, the rate's too high, the term's too short, whatever the scenario may be, and they're looking to consolidate, right? We see that every day. Clients are coming to us with 1 loan, 2 loans, 3 loans, and it's like it becomes to the point to where it's not affordable and it's really affecting their cash flow. So they're always looking for longer term solutions and consolidation options. So finding a broker versus a direct lender, there's nothing wrong with direct lenders. We have relationships with, approximately 100 of them across 10 products and different risk tiers. But if you go online, you don't know you don't know who you're talking to, if they're a broker or a lender, without doing a lot of diligence. A lot of brokers in our space are posing as direct lenders because they feel like if I say I'm a direct lender, it's going to be more likelihood that they'll work with me. They feel like it's like a negative thing that clients, it's like head trash, right? A lot of business owners may feel like if they go to the direct lender, they're bypassing the broker. But let me just give you one small example. I don't want to spend too much time on this, but let's just say you go online, you find a direct lender, you apply, you get approved for $150,000. Let's just say it's 15 or 20% interest, right? And it's an 18-month term, and you accept that. Well, what if you came to a company like us or another good established broker that is credible, that can give you and looks at your financials and your bank statements and your application and tells you in 24 hours or less than 24 hours that, hey, it looks like you're qualified for a line of credit at 10% or 12%, right? And in some cases, we're saving clients 10%. Sometimes we're saving them 20 or 30%. And the reason I say this is because some of the brokers and some of the shops out there only specialize or carry the more expensive product. Like they don't have all the different solutions that we do and some other more experienced, more established brokers do. So, and it doesn't mean they're doing anything wrong. They're just selling what they have available for their clients, right? So I don't want to talk bad about brokers. There's a lot of good brokers out there, and there's a lot that aren't so good. So you're by going to a not established broker or one that's not so ethical or credible or a direct lender. So let's use the direct lender example. You go to a direct lender, like the example I gave you, you get approved. It's one lender. So each lender has like one small criteria of what their element of risk is and what their maximum funding amount is. Some lenders max out at $100,000 loan. Some lenders max out at 200. Some lenders max out at $1 million and above, right? So if you're looking for $1 million and you go apply online and you happen to find a direct lender that caps out at 250,000 and you get approved for 250,000, you may think that's all you're qualified for, but you may be qualified for $1 million or more. So that's just one small example. And if you accept that first rate that comes your way, there may be a different, not only just a better rate. I don't want to make it all about rate. We're very competitive, but sometimes there's way better solutions out there. Mm-hmm. We find a lot of, just one small example there, we find a lot of clients that are coming to us looking for cash, looking for a line of credit or a term loan to go buy a piece of equipment. And they'll take a 1 year or a 2 year loan when we have equipment financing where they don't have to put a penny down. They don't have to use all their capital out of their account. Sometimes business owners are just taking cash out of their bank and just going out and purchasing it cash when they're draining their cash flow, which we all know cash flow is king, where we could give them 100% financing, not a penny down, and finance that over 5 or 6 years, monthly payments starting at like 6-7% annual interest. Mm-hmm. So it's about, to sum it up, so you understand, is that we provide business owners with all of the available options. Of course, we start with the most affordable, but we give them a few different options of what they may qualify for. And we go down each one to see what may be the best fit. We'll help them with that decision. But ultimately, our goal is to help you, the business owner, give you all the options so you can make the best decision on behalf of the business, if that makes sense.
That's a great explanation. So I think my related connected questions would be, who are the clients you aim to help and what key benefits do you deliver to them? If you can give us an emphasized version of your service to your dedicated clients.
Yeah, that's a great question. So who we're helping. So we do, of course, everyone likes funding the big deals, the $1 million plus deals, but we do help small and large businesses. The minimum size business that we could, pretty much help on the business side, if we're looking on the business loan, would be about roughly $5,000 to $10,000 a month in deposits. So I'd say $100,000 to $150,000 of annual gross sales. And then the maximum, we fund companies that are doing, between $50 and $100 million in annual revenue. So I'd say our sweet spot, like the clients that we do really well for, are typically doing between $500,000 to $1 million a year to about 20 to 30 million. So our sweet spot is like that $1 to $30 million range. But no client is too small for us to help, and no client, I'd say no client is too big, but there is some that could be too big. If you're $1 billion company, you're not going to come to Qualifi. But we've done deals, between 5 and 10 million. We've done several of them, lines of credit. And, we've had a couple $20 million term sheets that we're close to funding. So we're in that world of small to large. And what we find is a lot of our smaller clients that we helped out in the beginning, some of them grow their business into really big businesses that we're helping today that become really, really strong clients, and refer us clients as well when we do a good job.
Thank you, Eddie. So to all the viewers, you're watching ICPcast, and I'm Dr. Shah Siddiqui, and I have Eddie DeAngelis, and we are talking today all about lending, finance, and a lot of other things. So we have to do more questions in the next half of the episode, but we are nearly finishing our 40 minutes. So this is a 45 minutes episode, but we think we will bring Eddie to discuss more questions in the future to complete another 45 minutes, because I think with Eddie, time flies very quickly, Eddie. What do you think?
No, it does. And like I said, there's so much that we discussed kind of earlier on that I feel like we can share. And I think it would be really helpful, help a lot of business owners navigate financing, the best ways to go about it. And then people that are looking to start or build a business, or they're in the beginning of the stages, I love to share everything that I'm learning and still learning right now, because we're in a major growth phase right now of uncharted waters to where we've ever been at. And we're in that position now to where we're adding a lot of tech and we're introducing AI into our processes. So I'd love to share all of what we're doing here at Qualifi, and hope with the hopes that it's going to help others as well that are looking to grow their own business.
Thank you, Eddie. So to all the viewers, thank you for watching ICPcast. I'm Dr. Shah Siddiqui, and I have Eddie, founder and CEO of Qualifi. Now, we're going to taking a short break, and stay tuned. We'll be right back.
Great conversations start with thought-provoking ideas, and a visionary leaders turn them into reality. Meet Dr. Shah Siddiqui, an entrepreneur, AI strategist, and business growth partner dedicated to helping professionals and companies push boundaries, innovate, and thrive to drive transformation.
Did you know that 92% of executives consider digital transformation and AI adaptation are essential for staying competitive in today's market? Furthermore, companies that use data-driven insights for decision-making also see a 23% boost in profitability compared to those that don't. Through ICPcast, we bring together the brightest minds in AI, business, finance, marketing, and other tentative fields to deliver strategies that drive measurable success.
Dr. Shah is the founder and C-level executive and leads multiple startups, including Gen Z marketing agency, Neurodivergent Business Consortium, NBC, Time Research and Innovation, TRI, and Green Threads DPP. He is AI and technology expert and helps businesses harness AI for scalability and efficiency. He is a sales and business growth strategist and the creator of the Sales Funnel Accelerator, SFA program, to guide C-suite executives to maximize conversions and revenue.
You might be surprised to learn innovation isn't just about your ideas, it's about execution. In fact, only 10% of companies successfully turn their innovative ideas into scalable strategies, while The rest struggle with execution. Businesses that focus on effective implementation rather than just ideation 3 times more likely to outperform their competitors. After working with industry leaders and disruptors, I have learned one thing. Success isn't just about what you know, it's about how you apply it. That's why I created Sales Funnel Accelerator and ICPcast to provide actionable insights that you can apply right way to drive business growth and innovation.
Podcasting is now one of the most powerful tools for business influence, with 80% of listeners taking action after hearing expert insights. And when it comes to driving sales, 78% of social sellers outperform peers who don't use social media for business networking.
Are you ready to be the part of the conversation that is shaping the future of business? Let's explore innovation, strategy, and leadership together. Book your cast with me today. Hello everyone, welcome back to ICPcast. I'm Dr. Shah Siddiqui and I have ADD Angelis, founder and CEO of Qualifi. We got some exciting insight coming up. So stay with us and we will dive into the world of finance, technology, and innovation. Let's get started. So Eddie, thank you very much for joining today's conversation. I think viewers will like it and love it. Why? You have identified a lot of challenges and you also have identified how you have solved these problems with you and with your experience and backlinking your start and who you are now. So it's going to be a great episode for our viewers. So my next questions: are partnerships part of your business model? And from their perspectives, what benefits make you an ideal collaborator?
So yes, the answer is yes. Quality partnerships are a big part of Qualifi, and it's also a big part of our growth plan to continue building those partnerships and those relationships. So currently today we work with, several conventional banks where, as we discussed earlier in the episode, a lot of conventional banks, they're not able to service a big part of the market that don't meet their qualifications. So they unfortunately have to decline a large majority of their business owners that are coming to them that may be clients of theirs. So it's not the greatest situation for the bank to have an unhappy customer that gets declined. So we have a lot of contacts at a lot of different banks that refer clients over to us, because in a lot of cases, when clients don't meet conventional bank financing criteria, we are able to help them in a lot of ways. So it's a win-win relationship. So conventional banks, CPAs, accounting firms, and fractional CFOs are very big for us because they're working with several business owners that, have good relationships with their business owners. So any type of client that a CPA or an accounting firm or a fractional CFO refers over to us, they're typically really good clients for us to be able to help. We work with basically anyone that is working with other businesses. It could be a business consultant. Mm-hmm. It could be a business wholesaler in any type of, construction industry, where any business that's working with other businesses and they're speaking to businesses every day could be a potential good resource for us. We have other brokers that send us deals that may not be able to open up with a lot of the lenders and a lot of the resources that we have from being in the industry so long and doing the volume that we're doing. So we'll have a lot of other smaller brokers that'll come to us just to utilize us for all of our resources. And it's a big part of our business. We want to continue to grow that and focus on that as well.
Thank you very much. I deliberately asked this question to you, that what you do in relation with returning back. I came from a diverse background family from Bangladesh. I have seen struggle. I have seen also established a lot of different things. So in between that, I have a duty to return things back to the society that I was belonged to.
Absolutely.
And now I'm supporting individuals in different spaces. In my office in Bangladesh, I continually train people. I pay money to train them to get a better job, to get a better qualification. So after 6-7 years, I can see that those people that I have helped, they're in the UK, working in corporations, working in universities. Yeah. In the USA, last week, one of my employee that I was supporting him, he got scholarships from the biggest university in the US.
That's amazing.
these are the things that you think that, okay, that's a very good achievement because you're returning back. And
yeah, it just feels better than even making any amount of money because you're seeing everything and all that work and those gifts and even the people that you're helping and you're hiring. Like we're mentoring the young ones that we hire that are out of college and because we have so much experience, our management team, and we're even promoting healthy eating and things like that and going to church and just being a better human being all over. It's not just about the job, but that's what's part of our culture that we're all embracing and why we are, I feel like that's a big contributor to why we're seeing the success that we're seeing right now.
I totally agree. So it's been a pleasure talking to you, and we're going to be bringing you with another episode because we could not finish the entire questionnaire. There are lots of things to talk about. We're going to be dive into details in our next episode. So thank you everyone for watching today's ICPcast podcast, and thank you for Eddie to add value to these episodes. And I'm going to be welcome you to the next episode with Eddie. And we're going to be recording that in next couple of weeks' time. And we will let you know when we're going to be doing the premiere. So I hope that today's conversation with Eddie DeAngelis, founder and CEO of Qualifi, has sparked fresh ideas and provided valuable insight to elevate your business strategies, whether it is in sales, marketing, finance, or innovation. Don't forget to subscribe to our newsletters on ICPcast.com. Share this episode with your network. Leave us a review. It helps us reach and inspire more leaders like Eddie. So like our page on LinkedIn and subscribe to our YouTube channel, Sales Funnel Accelerator. And to know behind the scenes and content and updates on upcoming episodes, please stay tuned. Until next time, stay inspired, stay curious, and keep leading the way in innovation. So, Eddie, thank you, and bye-bye.
Thank you for having me, Doc. I look forward to the next episode. Thank you.
Thank you. Today, we will discuss from impact to investment, making giving smart with Hayrum Grenny. How are you?
I'm doing very well. Thank you for having me.
What inspired you to enter to this field?
So the name of our business is UI Charitable Advisors. At UI Charitable Advisors, we are a philanthropic advisory firm. What that means is that we help our individual donors, and a lot of the work we do is through financial professionals as well. So financial advisors, CPAs, trust and estate attorneys, really anyone working in the financial world with tax planning and helping their clients.
In the UK and in the US, most donation derived from big income. If you are earning a lot of money, in the UK, I have seen that businesses, like if we donate something, we pay less tax. It is better to donate some of our money for a charitable cause and then get two things out there. One thing is supporting individuals as a great charity. Second thing is also reducing your cost benefit.
Part of that is tax planning with their wealth professional, but part of that is finding a charity or a middleman that can help facilitate that for them. Somebody that can accept whatever that asset is and then help get cash to the charity that they actually want to support. And that's one of the major obstacles we face.
People wanted to donate money. They don't think when they are donating, like the critical way to maintain their assets and gain value from there. I know that you wanted to donate, one thing. Second thing, I know that you have a mind to support other people. Third thing, you get benefited out there and you are the one, you will create the end-to-end process for the clients so they can relax. Who are the clients you aim to help?
We offer to maximize, number one, maximize the tax benefit that you get for your giving, and number two, maximize your impact. We one of our big priorities at UI Charitable is helping people give in an impactful way. We not only care about getting the money to a charity, but we're saying, how do we help you maximize that impact and the good that you're doing?
Some people, they don't think about the outcome. They think that, okay, they are doing a great job and that job will provide outcome, but they don't worry about what outcome actually they will get.
Yeah.
What makes your approach unique?
I'll focus on donor advised funds. Donor advised funds are a charitable giving vehicle. It's basically a charitable savings account. So you can fund this DAF, have it sit there for a while, and then give to charity over the next 5-10 years, all out of this single account.
If you can make this kind of impactful decision making for your client, that will transform so many lives full of impact.
We've built our flywheel fully around referrals. And so our whole concept is establishing these really loyal, successful partnerships with wealth professionals. So that's advisors, investment advisors, CPAs, attorneys, different types of professionals helping clients do their estate planning and charitable giving. And so partnerships are really our sole focus. How do we develop deep partnerships where we're talking about important things and helping them help their clients give to the causes that they're most passionate about?
So 65% of bankruptcies in the US list medical debt as the number one reason for bankruptcy. If a patient says, I need literally anything done, I need an MRI, God forbid I have cancer, I need a sinus surgery, a knee replacement, anything, they let us know within about 2 business days. We are actually going to contract directly with their doctor, and we're going to pay them cash up front.
2 brains is better than 1 brain.
What we do feels too good to be true. And that's our biggest objection is people are looking for a catch. If you're not leading with technology, you're inherently creating an unscalable company.
When you develop a system, by the time you test it and implement it, you need to think about that time it will be executed for people.
If you want to go fast, you go alone. And if you want to go far, you go with others.
If you build a system now, and if you go for 5 years for testing and all other things done, it needs to be catered for 5 years later.
Correct.
Hello, everyone. Welcome to the Innovative Circle podcast. I'm Dr. Shah Siddiqui, and I'm welcoming you all for our another episode. And today, we're going to be discussing more into business development. You know, ICPcast, we bring game-changing insights, actionable strategies, and inspiring stories from top industry leaders and innovators. Whether it is technology, AI, marketing, finance, or leadership, our mission is to empower you with the tools for success. In each episode, we bring lots of information and core information with a guest. We talk inside and out. And today, we will have a special guest to join me. And his name is Jack Hawthorne, Chief Revenue Officer from Clearwater. So I'm just going to welcome him. Just give me 1 minute. Hello, Jack. How are you today?
Doing great, man. How are you doing?
I'm fine, thank you. So thank you very much for joining today's ICPcast, and we appreciate your contribution to the network as well as talking to some of the key areas that we wanted to consider to discuss, as well as letting our network know. So to start with, I just wanted to ask you, can you tell a little bit about your journey and what inspired you to pursue this career?
Sure. No, absolutely. The super short version, right, from a high level, is I worked early on in mostly trades. So I was a welder, parts manufacturing, that kind of thing. Knew I didn't want to do that forever. Ended up going to law school. And when I got out, I really enjoyed the business aspect of it, but never really enjoyed practicing law. My wife is also, we met in law school. She's a phenomenal attorney. She was great at the legal part. I loved the business side. We ended up building and selling 2 law firms, went into the real estate industry, lived there for the better part of a decade. Built a very large ecosystem where we were fortunate to have a lot of great people, about 1,400 sales representatives that worked with us. Did just under $4 billion in sales in 2022. We took an exit from that ecosystem, and whenever I was looking for what I wanted to do for the next season of my life, I met the great folks at Clearwater, the founders. We sat down, chatted a little bit, and kind of the stars aligned. It was something that really made a lot of sense to me, even though I never really had anything to do with healthcare. And I liked the idea of what they were doing. They were extremely disruptive, and it has proven to be a good decision so far, which has been exciting. But that's the short version of how we got here. So didn't start in healthcare, but I'm happy to be here now.
That's great to know, Jack. You know, you just mentioned that you were on legal aspects and you are now working as Chief Revenue Officer. What's the difference between your previous work and current works? How do you match, or I would say, your expertise on legals and expertise on the Chief Revenue Officer? And I have seen that you have also other qualities as well. So how they transform work like how it is supporting your understanding of law and being in your position?
Sure. So it's helpful to understand that there's lots of different types of practicing law, right? Which is great. I would probably be a terrible compliance attorney, honestly, because the answer is never no. It's, well, not like this. Like let's figure out how we can get this done, because usually there's a deal to be done somewhere, and we're all trying to figure out how to make that happen. And so I was fortunate when I was a practicing attorney to, as the business owner, I needed to get deals done. And so it was much more of a negotiation or finding a way to make those things happen, as opposed to, well, this isn't allowed and that's just how it is. Right. And so finding those, not even loopholes, just finding ways to satisfy everybody's needs while also making sure that you maintain the integrity of whatever the rules are, the compliance rules are, especially, now I'm in healthcare. There's an endless amount of rules and regulations, which are there for very good reasons. And so you want to make sure that you always live within the confines of those, because there's really no reason to live in the gray. You can live in the black and white. You just have to have a very clear understanding of what everyone's trying to accomplish. And that background's giving me the ability to frame that so that we can get things done much faster and without a lot of the conflict you'd normally expect.
That's really positive, I would say, because when you understand such of things and then you implement things with your work, it's just like you just add core value. And it's great to know, Jack. Thank you very much. My next question would be to you, what is the mission of your company?
Yeah, so the mission of Clearwater is to make healthcare affordable and accessible in a way that recognizes that the current industry, like the health insurance industry in the United States, is an extremely busted system. Mm-hmm. I have a very hard time running up against anybody that feels otherwise. And what we've done is started a company, we're almost a decade old now, but started a company that looked at all the things that we felt were wrong with healthcare and built an operating system, an administrator, plans, and we did all of that with the idea of 3 primary tenets. I always call it the cocktail napkin story, right? Like, what are the things you wrote down on a cocktail napkin that turned into the company? And it was only offering plans that are at least 30% less than the market average, only offering plans that can reduce out-of-pocket costs by at least 80%. Mm-hmm. And then at the time, it was a hyper focus on individual business owners and small businesses. And that last tenet has since grown because the opportunity has allowed us to do so. But the first 2 are the same. Our corporate mandate is that insurance is expensive because people make it expensive, not because it has to be. So we have truly started to make a substantial impact in that market, but it's really just changing accessibility for both the price, but also getting rid of just the complication for the sake of making it hard, right? Like, I don't think it's any secret. Healthcare for a lot of people, it's overly complicated on purpose as a gatekeeper. And if what's not that surprising is that if you make it easier to use and more accessible and less expensive, you generally have a much healthier population. And that's really been where we've driven.
That's fascinating, Jack. Thank you very much. But you know that before last month, there was a high figure killed during the, and you know that how it's impacting people and how people wanted to take revenge. So you are just bringing the gaps and breach between the health insurance and the community. So I think their contribution is greater than normally you would expect, isn't it?
Oh, absolutely. Yeah. I mean, and to your point, like it's tragic when there's any loss of life, right? Like in any way. When we look at it though, you had someone, very high profile person who was legitimately executed in the middle of the street. And collectively, the entire country was like, right, like that's a horrific light, shedding a horrific light on that industry, right? When everyone's like, yeah, we kind of get it. And so when you take a step back and look at how did we get here and why is it like this, it's not that complicated. There's a couple of things that make it really expensive. They don't have to be like that, but there's a certain level of pain that the U.S. population has accepted. And if you can move away from that, and we're great evidence of this, and there are other companies out there doing things that are similar to us. We're all kind of in our different lanes, but they're seeing tremendous growth. We're seeing tremendous growth because people are starving for an alternative.
That's a great example, I would say, Jack.
So on my connecting questions, I just wanted to ask you what the biggest challenge or trend you have observed in industry recently?
Yeah, so the biggest challenge that we've had in the industry has been what we do feels too good to be true. And that's our biggest objection is people are looking for a catch. They are used to being taken advantage of by insurance companies. And so the idea that an insurance company would simply charge less because it can, and our position is that we've traded volume for margin. We'd rather help way more people than less people that charge way more. And that is so unheard of that people sometimes have a hard time wrapping their head around it.
Mm-hmm. Yeah, when you work specifically, a big industry, I think US is the biggest health industry in the world. And when you talk about insurance, you talk about people, you talk about different type of collaborators and contributors together. In the UK, it's different, you know that. In US, it's different. So it's all about insurance. And in the UK, people don't bother about insurance because everything is paid for from the government. So I can see my brother, he lives in NY, and the way they manage their insurance, like, okay, I have to have health insurance because if I don't have insurance, I'll not be looked after. But here we see, okay, it's totally different. I never worry about paying health insurance here because my NI is taken off from the government and I'm secured. And even if I don't pay NI, still I'm secured. Don't need to think about that. So when you compare two countries in the world, to big power, so how do you systematically, analyze these things to perform better?
Sure. So you find the problems first and foremost, right? And so for us, the thing that we found is that there was a study done by the Commonwealth Fund a couple of years ago. So 65% of bankruptcies in the U.S. list medical debt as the number one reason for bankruptcy. And while that's a problem within itself, the much larger problem is that of those people, 90% of them had insurance, which means it fundamentally is not working, right? And the reason it's not working is one, it's too complicated for what they're doing, or it's very much not what they thought they were getting. And so in the United States, there's a lot of alternative products to major medical insurance, which just kind of covers everything. They're limited, right? They're limited indemnity. They waive certain things, but the average consumer does not know what they're giving up until it's way too late. And so when we were analyzing what really makes the difference, it came down to really two or three things. The first one is it has to do what you say it's going to do and what they believe it's going to do, which I know sounds obvious, but it's really not, right? So for us, we don't have any caps on coverage, right? The average American, even if they pay for their healthcare through a big name like a Blue Cross, United, Cigna, it's a very strong likelihood that there's a cap on how much is going to get paid out that year. And so that means that, okay, let's say you have $1 million cap on your coverage, but you have a $3 million emergency surgery of some kind. Well, for the average American, if you go in and say, hey, don't worry, you don't owe $3 million, you only owe $2 million. Well, that might as well be $15 million. It doesn't make any real difference. And so we wanted to make sure there's no cap so people are actually covered for everything that could happen. We wanted to make sure it's really easy to use because healthcare in the United States is very complicated, often unnecessarily, which also makes it more expensive because the doctors are trying to get paid and the insurance companies are typically trying to not pay them. And that creates this big spiral. What that does is when you combine making it simple, you make it really, really easy for people to use, and you actually address the things that they're needing to address, it gives you the ability to provide a product that's very stable because people typically stay, right? So for us, we have an almost 90% retention rate. So year over year, people stay on, which is really great because we know that people are on there. We know who they are. We can grow very steadily. In health insurance, the law of large numbers is really important. Right? When you get to a certain point, it doesn't really matter if one or two people get sick because the rest of everyone can carry them in a balanced way. But the fundamental problem in the US is that most of the products are built for everyone, which means they're not really customized or built for anyone.
Okay.
So you're getting a product that was made for the 7 million people that are kind of like you. But that means it doesn't address your issues, right? Not with any real certainty. And so when you start from the other way and say, well, let's build a plan for an individual, and then let's go help 2 people. Then we'll help 5. Then we'll help 50. Then we'll help 5,000, right? And it just goes and goes and goes. It's just a much different experience from the ground up.
Thank you. Thank you, Jack. So
Yeah.
that's lead me to a corresponding questions. What innovative approaches or strategies are you leveraging to solve these problems?
Yeah. So ours is, we're very straightforward. The innovation for ours comes from a program called Care Coordination. And so I'm a fundamental believer that in order for something to not only be disruptive, but to also be adopted, it has to be innovative enough that it changes things, but it also has to be familiar enough that people know how to use it, right? And they're not scared of it. Because if you do something too wildly different, your adoption suffers dramatically because people are scared of something new, which I get. And so what we've done is you have what you would normally have, it's PPO network in the US, right? I can go to any doctor network. But what you also have, and this is our secret sauce, it's not a secret, right? But this is what makes it work, is if a patient says, I need literally anything done. I need an MRI, God forbid I have cancer, I need a sinus surgery, a knee replacement, anything. They let us know within about 2 business days. We are actually going to contract directly with their doctor, and we're going to pay them cash up front. What that does is the cash pay price in the US is usually 60 to 70% less.
Mm-hmm.
And so that means that we're going to be paying 60 to 70% less for that claim. And if we're allowed to do that, we waive the entire out-of-pocket cost for the member.
Okay.
That is a massive change from what anyone has done historically, because one of the many reasons healthcare in the US is so expensive is because of how long it takes a doctor to get paid.
Mm-hmm.
But we're coming in saying, hey, I got cash right now. We'll pay you today, 2 weeks before it even happens. And they're thrilled to do it. And so we're in alignment, right? So the member doesn't want to pay out of pocket. So they're happy to get involved. We want to pay cash pay price because it protects the integrity and stability of the plan for everybody. So we want that. The physician wants to get paid up front. So they want it. And it actually puts you in a position where everybody's getting what they want. You're just getting it much faster. And because of that alignment, over 85% of our members use Care Coordination because they're actually incentivized to do so. It's not like, hey, will you help us save money? No, they don't care. Right. But if it's help us help you save money, now everyone is excited. And so that's really the way that we've innovated on what was currently in the industry and how we've approached it. And it has worked extremely well.
That's fascinating, Jack, because, I talk to many people in the USA and what they worry about is just health insurance.
Mm-hmm.
That's the biggest challenge for anyone. Doesn't matter if they're working, if they are not. So I think you are solving this problem very, very, I would say, gently, and as well as very clever to do in such a way.
Mm-hmm.
My next question would be in related to technology. AI is there, and technology innovation is there. So how do you tailor your methodology for needs of the current systematic approach of the AI or technology?
Yeah, absolutely. So we consider ourselves an insurtech company. And the reason we do that is because if you're not leading with technology, you're inherently creating an unscalable company. Mm-hmm. And I can say, I don't want to help 1,000 people, right? We want to help millions of people. And the only way to do that is through a very strong foundation of what we want done, and then a very tech-heavy scalability process. Mm-hmm. So we are 2 years in and a considerable amount of capital in on developing our own AI platform that actually runs an insurance company. Mm-hmm. And it's still a baby, right? Like it's in testing, it's learning, it's doing its stuff, but it's already phenomenal. But what it does is it gives people the ability to access on-demand questions very quickly. It knows the member, so it can answer their questions. It has a personality. So for those that want a phone call, you have a phone call. On average, it takes about 45 seconds for someone to realize they're talking to an AI as opposed to a person, which is longer than most of our clarification calls even last, right? Mm-hmm. And what it really allows us to do is to say, because we will need less support team to cover the day-to-day things, we will be able to hire the absolute best of the best at everything that we need, because they have the support, a very robust artificial intelligence component on the back end. And it's also why we're remote, I'm one of the few people in the world, I think, that I hate being remote. It's fine, right? But I love an office, and I know that makes me broken and old, but it is what it is. But being remote means we can hire the best talent from anywhere in the world without having to worry about any restrictions. And that is so incredibly worth it. So when we're looking at this, we're going, how do we get the best talent, the best experience, the best process? And it has to be by being tech forward, by situationally developing either our own technology or using technology that's already fantastic that we couldn't replicate in a meaningful way, and kind of finding that balance, but also understanding that most companies have tech that they like. And so because of that, all of our systems are built to API into essentially anything. Because if I have to dictate your company has to change what you're doing in order to work with us, my adoption goes down, right? Just for no one likes change. So I'd much rather build it to be friendly with anything that you're already using. And that just makes it a much more frictionless process.
I totally understand. By being an AI specialist, as well as working in the industry for custom software development, my PhD research was to build a cloud hospital. And yes, I completed that research to building a clouding hospital. But there are lots of, legislation and a lot of other things in the way. So when I completed my virtual hospital, I tested it in Bangladesh and in the UK. People there using it. It's become very much progressive. Like, okay, it's very much faster in compared to the current people. They're going to be using it. So my thinking was, okay, when you develop a system, by the time you test it and implement it, you need to think about that time it will be executed for people. So if you build a system now, and if you go for 5 years for testing and all other things done, it needs to be catered for 5 years later.
Correct.
Okay. So still ongoing research with the virtual hospital, but the way you say it, the way you support people, API integration, all other things to adopt new technology is fascinating. It's fascinating, Jack. So my next question to you would be, you must have challenges and lessons and significant success doing your technology, as well as tailoring your methodology to your target audience. Can you share some of the success stories or failures to the audience?
Yeah, absolutely. So, there's you hit a great point, which is the development testing. When does it actually hit the market? Is it ready? Is it an old product at that point, right? Because of what it is. What we have found is that people are willing to accept a slightly bumpier process as the other side of innovation. And so what we will generally do is when we are rolling out something new, we're going to ask our current population, hey, we have a new member portal, a new AI thing, a new whatever. It's not done, right? Like you are live testing it as we go, but it's better in all of these ways. Would you like to test that with us, or would you like to wait until it's fully cooked? And we will have people that say, let's do it, right? Let's roll with it. We know it's going to be bumpy. And we always ask, we want feedback. And positive feedback is great, but negative feedback is way more important. Let us know what's going on. And so while I would never require someone to use something that's still being cooked, I would so much rather test our technology with the people that are actually using the technology, because the bumps in the road are being experienced by the people that are actually experiencing those bumps in the road. That's the intended audience. And so when we consistently hear back, hey, to your point, concierge virtual medicine is a non-negotiable. It has to be. So now, because of that, every plan we have has at no cost concierge virtual medical in all 50 states. Like I can FaceTime a doctor within 30 seconds at any point. And they can prescribe medication. They can send me somewhere else if it's beyond their capability. That is a complete non-negotiable. And we know that because of essentially focus grouping and getting feedback on our tech development and our tech stack with our current members. That's a success in the sense that we understand that. The failures are that sometimes things don't work, right? I mean, we've rolled things out that no one cared. We have tried to roll things out and this is going to be amazing. And everyone in university is like, it's fine. They're like, okay, well, that was a waste of capital and time. And so finding out what people care about, asking them what they care about, realizing that people care about different things in the moment that they do on the conceptual level. right? Like there are things that I care about with my healthcare that sound great, but then there are things that I really care about when I am staring down the problem and I need it in that moment. And at that point, what we found is the bar in healthcare customer service in the United States is so low. Right? Like it stopped developing in the late 80s, right? They just didn't have to do it anymore. If we can say, look, we're going to start by providing a neutral to positive experience globally, but we provide a hyper focus on a great experience when you have a crisis. And then we develop back into the global, it's much more impactful because no one is calling us on a good day. Like that's generally like when I was practicing as an attorney, no one called me because they were having a phenomenal day, right? I'm getting called with problems. And healthcare is the same way. It doesn't matter how good everything is. The human element from the legitimately dozens of people from doctor to pharmacy, accounting, the amount of people involved in the process means that human element and that human error is going to be a factor. So if you don't account for that, you're setting yourself up for failure. And that's something that originally I think we went through a process that everyone goes through, which is, well, we're going to put education materials out and people will read them and understand them, which has never happened ever. Right? Like it's we want to put them out there for the folks that will read them. We also need to be prepared to help people that fundamentally don't understand what they may have signed up for. And we want to very gracefully and empathetically guide them through that to get them care.
Thank you, Jack. Thank you. So thank you for joining today's podcast. And I'm Dr. Shah Siddiqui from Neurodivergent Business Consortium, Time Research and Innovation, and Sales Funnel Accelerator. And we have our guest, Jack Hawthorne from the Clearwater, and we're talking about today healthcare. So we're just going to go for a small break and we will welcome you a little bit later after the break. Thank you.
Great conversations start with thought-provoking ideas, and visionary leaders turn them into reality. Meet Dr. Shah Siddiqui, an entrepreneur, AI strategist, and business growth partner dedicated to helping professionals and companies push boundaries, innovate, and thrive to drive transformation.
Did you know that 92% of executives consider digital transformation and AI adaptation are essential for staying competitive in today's market? Furthermore, companies that use data-driven insights for decision-making also see a 23% boost in profitability compared to those that don't. Through ICPcast, we bring together the brightest minds in AI, business, finance, marketing, and other tentative fields to deliver strategies that drive measurable success.
Dr. Shah is the founder and C-level executive and leads multiple startups, including Gen Z marketing agency, Neurodivergent Business Consortium, NBC, Time Research and Innovation, TRI, and Green Threads DPP. He is AI and technology expert and helps businesses harness AI for scalability and efficiency. He is a sales and business growth strategist and the creator of the Sales Funnel Accelerator, SFA program, to guide C-suite executives to maximize conversions and revenue.
You might be surprised to learn innovation isn't just about your ideas, it's about execution. In fact, only 10% of companies successfully turn their innovative ideas into scalable strategies, while the rest struggle with execution. Businesses that focus on effective implementation rather than just ideation 3 times more likely to outperform their competitors. After working with industry leaders and disruptors, I have learned one thing: success isn't just about what you know, it's about how you apply it. That's why I created Sales Funnel Accelerator and ICPcast to provide actionable insights that you can apply right way to drive business growth and innovation.
Podcasting is now one of the most powerful tools for business influence, with 80% of listeners taking action after hearing expert insights. And when it comes to driving sales, 78% of social sellers outperform peers who don't use social media for business networking.
Are you ready to be the part of the conversation that is shaping the future of business? Let's explore innovation, strategy, and leadership together. Book your cast with me today. everyone. Thank you for watching today's Innovator Circuit podcast. I'm Dr. Shah Siddiqui, and I have Jack Hawthorne from the Clearwater, and we're going to be continuing our conversation to the next segment. Jack, on this segment, we have specific more questions for you to contribute to the future innovators, business people. So, in a way, talk about actionable takeaways. What advice would you give to the business aiming to achieve specific goals in the healthcare industry in the US or elsewhere?
Yeah, so it's a little more global than that, honestly. Regardless of whether you're in healthcare, real estate, tech, whatever it may be, the simplest answer and the one that is most often overlooked is that you have to identify with extreme clarity and prejudice what your goals are. And you have to identify what they are not, which is much more important, because the number one reason that I see companies not achieve their goals is because they are easily distracted and they are absolutely haunted by opportunity loss.
Mm-hmm.
It's so hard, and I'm a living example of this. It is so hard to stay focused on the target when you know that there is an opportunity you could also be pursuing that may or may not, and they always seem amazing, right? But they may or may not produce additional results. But I've never seen a successful deviation to that. It is always more effective to say, this is what we are doing. And if we are going to make a paradigm shift as a company and we are moving our attention here, that's great. But it's a very challenging thing that I very rarely see done well, to say we are going to divert resources, capital, and time away from the actual objective and split it off over here. And somehow we're going to do even more. That just typically doesn't work out.
Thank you. Thank you very much for your contribution to the network. Next thing I just wanted to ask you, we think about global. And when you think about global, you have to think about the current geography as well as the politics. So you know that now at the time when Trump is there, changes in EU as well as in Middle East. How do you see this as an opportunity or threats?
Sure. I'm going to give probably the lamest answer you could ever get to this, which is I am generally not going to step on the scale unless I'm going to do something with the information. And so the way that politics and the international environment really impacts us is as policy changes occur, we are going to roll with those. We're going to plan ahead to a degree. We know that there are certain healthcare policies more popular when Republicans are in office. There are some healthcare policies that are more popular when Democrats are in office. But president to president, it rarely makes as big of an impact as people give it credit for, at least in the healthcare space, because nothing in healthcare changes fast, either good or bad. It takes a long time for things to change. And what I have found is that it is a reason that a lot of people use to not take action, because they're like, well, I don't know what's going to happen. Like, well, you're never going to know what's going to happen. And so we largely focus on, is there anything happening right now that has the potential to impact our mandate of offering the plans the way we want to offer them, providing amazing customer service, focusing on retention? Generally, the answer is no. And if there's opportunities for us to develop new channels of business, then phenomenal. But I also have a simpler view on it because we are U.S. specific, right? Healthcare for us, like, we're not reaching into other countries with the exception of pharmacy. And so for pharmacy, international sourcing is really, really important to keep costs down, because the cost of drugs manufactured in the U.S. is ridiculous, as kind of everybody knows. My thing I would say is like, well, insulin made in the U.S. is made with angel tears, because that's, it's 10 times more expensive than even Canada. And so when we work with, they're called prescription benefit managers, PBMs, those are the companies that really administer the pharmacy benefits. We only work with people that are extremely transparent on their pricing, on their contracts, but also they will internationally source, because it's just better for the consumer if we do. So far, we have not seen an impact coming down on the pharmacy benefits yet. It is possible that some of the tariffs coming through are going to impact that. But candidly, even if there's an additional, let's say there's an additional 25% tariff on Canadian goods, they are still so much less expensive than sourcing in the United States that you are still drastically improving the cost for the member by sourcing it internationally than by buying it by a US manufacturer.
Thank you. Thank you.
Yeah.
That was a great example and answer. So my correspondent questions is, can you share a successful project with us where you have achieved a measurable outcome?
Yeah, no, absolutely. So probably the most successful project that I've been involved with in Clearwater was us shutting down our direct to consumer division for employment groups and going through brokers instead. And so what that really means is for the first 8 or so years of our existence at Clearwater, we went direct. We focused on big trade associations, large companies that had a big 1099 base, so contractor base. They weren't full W-2 employees, which means they didn't have access to benefits. And so we still do that. But what we do now instead, predominantly, is we do that on the individual side. We still help the individuals that need help. But if we're talking to a company that needs benefits, we pivoted to say we now work through outside brokers who are going to bring business and write the business just like they would for a Blue Cross, United, Cigna. We're just an insurance company that they're quoting. And that pivot allowed us over the last year to just over quadruple in size, because we effectively, I mean, I couldn't even give you the percentage, but our sales force exploded. Because instead of us just reaching out and engaging, we're now working through others. And, you know, I've always believed in the mantra that if you want to go fast, you go alone. And if you want to go far, you go with others. And we chose to go very fast in the beginning to develop products that were very contrary to what people are used to seeing. And we hit a point where we said, okay, we are now ready. We have what we need. Let's build it to go far. And so we started partnering with a lot of really great people. And that has been the key success that's really driven our growth over the last probably 2 years.
Great example, Jack, because through my work, I can imagine the ways you say that faster, yes, you can make your decision yourself. So it will be faster anyway. But if you wanted to grow better and, well, you need some other people, because one brain is worse than two. I always give these examples. People say 2 brains is better than 1 brain. So when you have many people, expertise in your team, or outside collaborators, you can bring things differently. So the next segments are going to be talking about more into the future. So thank you everyone for joining today's Innovator Circle podcast. And I have Jack from Clearwater. So we just wanted to talk about the future, you know, in relation with industry trends and shape the future of your industry over the next 5 or 10 years. What specifically trends you would follow to predict the right path?
Sure. So, you know, generally speaking, the only way you can know where you're going is to know where you are right now and where you've been, right? That gives you your trajectory. And what we've seen is that there has been a growing need and a growing, voice from the American consumer on healthcare, saying this is getting out of hand. It's progressively more expensive every year, while benefits somehow still get worse every year. And so for us, we're looking at the trend over the last 2 decades that people are averaging massive increases every year. The benefits are slowly being chipped away and getting worse over time. And for us, we're looking at it going, okay, we see where the industry is going in that direction. So if we can find that, again, very familiar, but still very innovative direction and answer the need that people have for an alternative to those legacy carriers, then it allows us to really plot our trajectory quite cleanly, because we know they're going up and to the right. Right? Like, it's going to get more expensive. It's just going to keep getting more expensive, and take a lot to dislodge the stranglehold that those legacy carriers have on the market. But it is such a massive industry, and there's so many people that are involved that even making a dent in the industry will allow us to have substantial success and change hundreds of thousands, if not millions of lives over the next few years.
That's a great answer, Jack. Another thing that I wanted to add, I will ask you the same questions again. When I talk to individual businesses and when I talk to them, like, okay, are you thinking about the current technology? Are you thinking about the current geography or politics or a lot of other things? Because everything is your business contributor. Some people, they ask me, okay, why do you want to tailor a methodology for next 10 years? Why don't it be next couple of years? In relation to that, how do you tailor your methodology? Do you do short term, long term, and mid term? Or you do like, okay, this is my 20 years methodology, and I wanted to change it while as an agile process, time to time, and get out there. How do you do that?
Yeah, so it's kind of all of the above, right? So generally, what we found is that if you're thinking within the next 3 to 5 years and that's it, you probably don't have the scope of vision to really dictate what those 3 to 5 years should look like, right? So for us, if we know that in 10 years, we want to be, let's say a publicly traded company, and we want this much in valuation, we want to be helping this many members. Well, in order to do that, it allows me to lay out the specifics of saying, if I'm going to get there in 10 years, that means in 5 years, I need to have these things done, which means in 3 years, I need to have these things done. In 1 year, I need to have these things done, which means in the next quarter, I need to do these things, which means in the next month, I have to do this. And that is an obnoxious level of breakdown. However, what I have found is we treat everything like a software sprint. So I know that in order to create the Lego brick I need to create that will eventually be part of the 500 Lego that will eventually build the thing we want to build, right now, put this little thing on this. Right. And so to break that down to just a absolute micro level has allowed us to say we are all off track. We know why, we know how to fix it. And we have a lot more control over what we need to be doing because there is no guesswork. At no point does anyone in our company not know where we're going, how we're going to get there, and what their role is today to help us achieve what we're going to look like in 2035.
Great answer, Jack. Great answer. Because when I talk to people, mostly when I work with individuals in C-level executives to talk about technology and talk about the process, I'm very process driven. And I ask them, okay, where you wanted to see in 20 years time. Okay. And sometimes some people, their eyes become very big. Like, okay, why are you asking me 20 years time? And my answer is because if I see where you want to be in 20 years time, I need to reverse engineer it to present time, that what you need to do right now to achieve that one. So that's the way I think. Different people would work differently, but to achieve visionary, you need to see the vision first and then reverse engineer it to start the right point to get to where you want to be. Because if you don't know where you are going, you don't know. You can't go there anyway. So thank you very much. So thank you everyone for joining today's podcast. We have a few more questions to ask to Jack, and it is great pleasure to you, Jack, today. So my next question is a correspondence questions, with the upcoming threats, current threats, and the challenges we have in community, culture, and a lot of other things. What suggestions you would give to the businesses that how they prepare for the business challenge in the future?
Sure. So I think it's going to be making sure that you are not over glorifying or emphasizing the challenge. So most of the time, challenges are fairly straightforward, right? With whatever is happening, we have a way to complicate them by talking about them, thinking about them, giving them this like personification, and they take on a life of their own when generally there's a problem. The solution's relatively evident, but it's also usually uncomfortable, right? So whatever the solution is may not feel good, but that doesn't mean it's not the solution. So generally speaking, the way that we look at the best solution for a problem or a challenge is to remember that the best solution is not the one with no negatives. That generally doesn't exist. It's the one with the least number of negatives that allows you to address the problem, maintain your core identity, and continue moving forward without letting a crisis dictate the direction of your company.
Thank you, Jack, for your time today. And I hope you have enjoyed. And I also hope that all the viewers you're watching this podcast, we have added enough knowledge for you to take some actionable strategy and takeaways. And to all of our viewers, thank you very much for tuning today, the ICPcast. And don't forget to subscribe and leave a review and share this episode with your network. And follow us on LinkedIn and all other social media. And Jack, thank you. And if you wanted to say anything to our guest, the last remarks.
No, thank you guys so much for having me. It's been an absolute pleasure to chat with you, and looking forward to connecting with anybody who'd like to learn more.
Thank you. So thank you everyone for joining me today's podcast, and I will bring another guest on my next episode. Until then, stay tuned and bye-bye.